Hello, welcome to BTech Forex, and I'm your host. So remember to check on my previous video, the one we did for MetaTrader 4, how to maneuver on the MetaTrader 4. So if you want to check it out, please go and check it out because it's going to help us in this course that we're going to take. So the next course we are taking is our trading orders. So make sure that you subscribe to our YouTube channel and get tuned as we learn these different types of orders. So as you can see, the different type of market orders. So there are different types of market orders, as you can see. So there are market orders, and then there are pending orders. So market order is an order instantly executed against at a price that your broker has provided. And then pending orders are ordered to be executed at a later time as the price you specify. So those are the kind of type of orders we're going to be looking. So for market orders, we have two types of orders. That's a buy, and then a sell order. And then the pending orders, we have a buy limit, we have a sell stop, buy stop, we have a sell limit, and then we have a sell stop. So those are the different kind of market orders that we have. So let's look at the first one, market order. So the first market order, it is the first market order. This is the first market. A market order is an order to buy or sell at the best available price. So what does it mean? So actually what it means, it is like, let me show you. So what it means, like for example, if you say this is our chart, so it looks like, then our current price, it's at this level. That's the price that our brokers offering to us. So that's if you want to buy at this current price, so you can either buy at that market price, or if you want to sell, you sell at that market price. So that's what it means by the buy market execution. So for that buy market execution, you're taking a trade exactly at that given price given by your broker. So broker will provide you the price, you will see it. As we go on to checking onto it, we shall see and we'll learn about the different types of order. So for the market orders, there are only two types of orders. That is this buy and the sell order. Now, if you go to the pending orders, we have different types of orders. So we have the buy limit and the sell limit. Now, first we shall be checking at the limit orders. So a limit order is in an order placed to either buy below the market or sell above the market at a certain price. So what does it mean? So what it means, so like for a buy stop, order placed below price and price then goes up. So let's take for an instance, the price is at this level and we know that the price, like we're in an uptrend, the market is moving in an uptrend, making a series of higher high and a higher low. So what do we do? So if the market is at this level, we expect the market to give us a correctional move, trigger our buy limit, like say this is our buy limit, trigger it, and then continue moving with its uptrend, the initial trend. So that's a buy limit. For a sell limit is the same. So the market is at this level, we put a pending order. So we want the market to come, trigger our sell limit, and then continue moving in the downtrend move. So that's all for the buy limits. Now we're going to check on the other limit order, which is stop entry order. So a stop order, an order from executing until price reach a stop price. So what does it mean? So what it means, it is like this. So a price will be at this point and we expect the price to rally upwards. So what we do, we put a buy stop. So a buy stop, you will be predicting a point that the market will reach and then continue moving in the upwards direction. So we'll take a buy stop there. So we shall place a buy stop so that the market comes, continue, triggers it, and then continue moving up in the uptrend direction, like with the perspective of uptrend direction. For a set stop, is just the opposite of the bar, a buy stop. So all of this, we're going to check it on the chart and we shall see how we're going to be using this orders. So for a selling stop, so our market is at this point and we expect it to rally downwards. So what we do, we shall place a stop, a sell stop in between, so that when the market comes, it will trigger it and continue moving in the downward side. So those are the types of orders that we have. So we have the stop loss order. So for a stop loss order, they are actually an order to close if the market price reaches a specific price, which may represent a loss or a profit. What does it mean? So it means that if I'm going to enter into a market and then the market now, my trade will be activated. So what you do, you have to put your stop loss order so that it prevents you from going into any losses when the market goes against you. So sometimes it prevents for you, like you want to lose all of your accounts. So most of the time it's nice to use a stop loss. So those are the types of orders we're going to learn, and within the trailing stop orders. So we shall know how to use those trailing stop orders so that you prevent yourself from losing more pips if you need a profitable trade. So let's go and check how we're going to use this kind of type of orders. So let's move on. So let me share my screen. So this is the MetaTrader 4. So if you have not checked on my previous video of how to use the MetaTrader 4, so please, you can go subscribe to my YouTube channel at DTech Forex Imperial and watch the YouTube channel. At least it will be ahead for you. So at least it will help you out to use these pending orders. So let me show you how we're going to use those orders. So the first orders that we were looking at are the buy orders and the sell. So for the buy orders, there are orders you just come here, click. So this we have the sell and the buy. So what we do, as we can see on our right side, this is the price stamp, like the price the broker giving us the price of each and every currency, and there you can see. So that's the price stamp for that one. You can see this is GBP USD. So this is the price stamp order. So we can see the market is at this level. If you can see my cursor, you can see the market at this level. So let's go back to our euro AUD. So if you check, the market price is at 1.47830. So that's the current market price. So what do we do? So if you want to take a market order, either a buy or a sell, you will go and press. If you are doing like this, so you come to buy order. So you just press. If you want to take a buy order, you just come press your buy order. Then it will trigger into the market. Now, if you want to do the stop loss order, so what do? You come, drag, and then drag it just like that. Then this is your stop loss order. If you want to take profit order, you come, press, and just drag it and drop it. So when you drop it, this is your take profit. That's how you do. So for a stop loss order, it helps you that you don't lose money. We say like the market is at this point, and then the market will use. So you expect the market to rally downwards up to this point, but at the end of the time, the market goes against you. So for this stop loss order, it will prevent you from losing more money than what initially you were expecting to lose. So that's the good thing about the stop loss order. And then the take profit is still the same. It helps you that if you're in the market and the market rallies like downwards until you to your stop loss. So you say you'll put your stop loss to this next low. So you expect the market to go up to this level. So when the price comes, it reaches a level and then it will take profit. So even if the market goes against you, you've already hit your target. So you don't have to get scared when that market goes against you. So for a sell stop order, for a sell, you still just come, sell by the market price, you just press, sell by the market price, the order will appear here. So that's how we do the orders for the market special orders. Now let's go and check on the pending orders. So for the pending orders, 1 minute. So for the pending orders, we have the buy limit order, and the sell limit order. So how do we place the buy limit and the sell limits? So let me show how we do it. So for the buy limit, this is how we expect the market to react. Now, if you're in an uptrend, the market is making a series of high and higher lows. Let's say like this. Like this. That's how the market will be moving if it is an uptrend. So for a buy limit, we say now if you can see the market is making a series of higher lows, higher lows, high, and then now we expect the market again to come from and a higher low. So for the buy limit, you will come and place your buy limit. Let's say you're placing your buy limit at this level. So buy limit. Buy limit. So we're placing our buy limit at this level. Let's have this level. So we expect when the market comes and form our first high, then we expect the market to rally downward to make a correctional move to this. Either it can be your block or your demand zone. So what do we do? If you expect your market, if it is on a series of higher high and higher lows, you know it is an uptrend. So what we do, if you don't want to miss that trade, you put a buy limit so that when the market travels up downwards and then makes a correction move, it can come and trigger a trade and then continue moving with the trend that you had anticipated, like in an uptrend. So that's how we do it. Now let's say, now let's take an example. So like we say, like now we look at here. So at the current price market, this is the current price market. As you can see, this is the current price market. So for this market, we may expect that this market may rally, may come, make a correction and move maybe to the upside, and then come and then drops to the downwards. Or you can say that we expect the markets with this market to come from these points to go on an upside, and then it makes a correctional wave again to either maybe say I'm not at this level, and then it comes and rally again to the upside. So what we do, we shall put like a pending order. A pending order. When the market reaches this point, we will come and put a pending order at this level, and so that we expect the market to go up. So how do we put the pending orders? So what you come and do, if you have a computer, just press F9. It should bring you. So you see the market execution. You come to market execution, then you go and open the pending orders. Pending orders. Don't forget you are using a pending orders. So you click on the pending orders, then it will give you different types of buy market limits. So there's a buy limit, then the sell limit. So what are we looking at? We are looking at the buy limit. Then you come click on the buy limit. It will type this the buy limit. Then at price. At price is which price are you anticipating the market to give you that correction move to trigger your entry and then continue going up. So the price that we anticipate it is at this level. So you see this level, which is 1.49236. So you can note it down for easy entry on your pending order. So when you come, you just come here to your pending order here, then fill the value, just fill in the value. Just fill in the value. It's 1.49236, and then you place your order. Oh, let me see. Okay, there's something wrong here. Pending order. So it's a buy limit. Buy limit. Come. So the market at this level, so we want to buy at that current market price. So expect the market to rally down. So what we're going to do, so we come, let's check again. So well, we're supposed to pick this one, 0.7 minute, F9, markets, pending orders, then come 1.474720, then you place your order. So this is what we picked. So expect the market to rally like from this point. It may rally downwards up to this level. From here up to this level. Then come and trigger our trade. Then it continues moving upwards. So that's how. So for the stop loss, you can either come and type it here. You just type it here the way you did your pending orders. You just type it here. So you come and take 1.46700. So just place it there. So you see, this is your stop loss. Now take profit, you just do the same. You just come look for the price where you want to take your next stop loss, maybe at this high. So you just come take your entry, like just there. You type it in, and that's all you can do it. So for the sell limit is just the opposite. of the buy limit. Let me put my take profit. So you can say 1.49180. Then you modify. So you see, this is now a take profit. So that's how you just do it. So you see, that's how you modify it. For a sell limit, it's just the opposite of the buy limit. So now let's go and check on the sell stop. So how do you use the sell stop? Let's delete this one first. Let me delete this one as we look at our next order. Now for the sell stop, this is what we expect. So if you see this, the market is rallying downwards. Maybe we say this market is rallying downwards. So what we expect that the market will move from this point, will continue downwards. So for a sell stop, this is how we do it. So we expect the market now, let's say we're in a series of like this, market is in a downtrend. So it will be making a series of higher lows and lower low like this. So for the sales stop, we expect the market to be continuing with this normal trend of going downwards. So, but now you say the market is at this current price, we expect it to come from this current price up to this level. So what do? We put a sell stop. So how do we put a sell stop? So let's say we'll be placing the sell stop at this level, and let's say at this level, little bit. Maybe we put a sell stop at, let's say, at this level. So we expect this market to rise from this point and then continue moving downward. So where shall we put a sell stop? A sell stop shall put it here. So also sell stop. Sell stop. So for a sell stop, we expect the market to come from this point and then continue rallying downwards. So when it continues rallying downwards, it will trigger our entry and then continue move downwards. So what we do with the sell instruction, we just press F9 on the computer and come, then go to pending orders, then come here, then look for a sell stop. Then for sell stop, we just do the same, take your cursor, look for the point that you were supposed to enter. Now the points that is on your right, write them down 1.46988. So those are the value we're going to feed here at current market price. Then come here, 1.46988. Then you place your order. So you see, that's our current market price there. So now if you want to edit it, what do you come? You come and just double click on it, then you come put your stop loss, then you put your take profit. That's how you do it. Now we didn't talk about the trailing stop loss. So how do you use the trailing stop loss? Let me show you how we do it. Let me first delete this one. Let me delete this order. So for a trailing stop loss, it works much better when you execute at that market current price, or if you are the pending order which is being activated and it is running, that's how you can put a trading stop loss. So this is how we do it. So we say that the market is at this current price. So let's say we are buying it at that current market price there. Then we put our stop loss. So that's our stop loss. And then we say this is our take profit. So for the trading stop loss, we come right click, then come here, trading stop loss. So for trading stop loss, we just come. You see they are different, they are in points. For trading stop loss, they're in points. But on the stop loss, they're in pips. You can see pips there where there's -792. For stop loss, they're in pips. And for trailing stop loss, they're supposed to be in points. So what we'll do, so you see the value that comes with your stop loss, the last value when you put your cursor there. So it brings the last value of 8.6. That's the value that we're going to use. So we're going to get that 8.6 and we add a 0. There's supposed to be like 4-digit numbers. So for even if you add like 8.8, like 80, like 80 would add a 0, so it would be like 800. So they're supposed to be like in hundreds. That's how you're supposed to do it. So when you come, right click on it, then come to trailing stop loss, then you come to custom. So you see this point, so you have to feed the points. You come to custom, then put the points. So you come and say 8060. So you do it, and then you press OK. So when you press OK, it will activate your trailing stop loss. So you see when you come to your stop loss, it is showing like a yellow color there. So it's saying that your stop loss, your trailing stop loss is activated. So for trailing stop loss, what it does is if your market it is in a profit, you're in a profit, your market is moving upwards, and then the market decides to go against you, like it comes against you, your trading stop loss, what it does, it locks your profits, that the profit that you had gained during that market when it was rallying upwards, it will be locked, so that when the price is become like the price moves against you, you don't lose all your money. You still have some money which is locked within that single trade. So at least you have some money that you're not losing anything at all. At least you have several money that you're locked. At least when the trade goes against you, still have money that you can capitalize out of that trade. So that's the use of a trading stop loss, and that's how it works. So I think we're going to stop from there today. I think everyone will know how to use those different types of orders. I know they're hard, but true, they're simple. So I think we're going to stop from here, and I wishing you all the best and have a nice evening. So don't forget to subscribe to our YouTube channel and follow us at WeTech Forex and people on YouTube and on every other platform. So